And I'm certified financial planner David Somerville. I'm here on today's show, joined by Nicholas Vendittelli, a financial advisor here at Capital Wealth. Nicholas, how are you?
Great. How are you doing? Thanks for having me.
Oh, it's great, man. Great to have you on the podcast today. So
Yeah.
let's talk about most of our clients are getting in their statements.
hmm
2022 was a really, really unique year in
Yeah.
the stock market. I mean, obviously, looking back to 2020, that was a COVID year. Markets had a fantastic year
Yeah.
performance after the initial COVID slump. But investors were really happy with 2020 and their performance. 2021 was a backup year, came in great again.
hmm
And then, of course, we had 2022, Nicholas. So let's kind of
Yeah.
look back at that. So let's talk
Yeah.
about how the year in 2022 closed off and some of your thoughts and feedback on that
Yeah.
year.
Yeah. So real quick, a lot of clients I had who came in around, call it January, February, even to March, they're all right, treading water, a couple upswings, downswings in the market. But, fast forward through the year, things really started to take a decline. And, the Bank of Canada raising rates, the political environment with Russia and Ukraine, total instability globally,
Right.
and the markets took a slaughter through the mid to end half of the year. But I would like to say, I had a lot of clients come in January. When we're sitting down, we're looking at the year in review, as well as what's the outlook like. But a lot of them were very surprised to look at that last 3 month stretch in 22, even 6 months out. They were surprised. I thought things would be a lot worse. I thought I was, way below. I had some clients who actually bounced back.
Right.
And the main thing I wanted to really convey to the clients is, when you stayed the course through the year, in spite of all the chaos, things started to pick up. Portfolio managers, they rebalanced in spite of these times. They could foresee with all the information they had that, there was going to be some tough times,
Mhm.
but they knew exactly where to place all of their investing and their strategic analysis of different stocks and investments and different sectors. And I really found that there was a good recovery, a really significant recovery in the later half.
Well, I've
Yeah.
had multiple client meetings in the past month or so into 2023. And like I said back in 2022, the first half of the year was it was a train wreck. It was
Yeah.
a really tough time for investors. The third quarter was okay. The fourth quarter was pretty
hmm
good. And of course, Q1 of this year, we're off to a quick start. But you're looking
Yeah.
back in 2022, traditionally, what happens, most investors have a combination of offense and defense in their
Yeah.
portfolio. They have stocks, they have equity type investments, and then they have fixed income to help balance it out. And it was one of those years, I think it was since the 1940s, it was the last time that both the stock market and the bond market had double digit losses in
Yeah.
a calendar year. So it was a tough year, but
Yeah.
good on you for understanding the fact that if you stick with the game plan, the portfolios were being actively rebalanced.
Yeah.
Things that were maybe their focus in 2022 early, they exited and they added positions that were going to be a bit more potentially um, beneficial moving into
Yeah.
2023. But now that we're into 2023, so what's your view on the outlook of the stock
hmm
market and where potentially there's going to be some opportunities moving forward?
Yeah, personally, I'm very optimistic, especially when clients have time on their side. And I think that when you have time on your side, you can be very, strategic, and you can really sit in the pocket, as you'll say, with your wealth. And in spite of all the things that go around, with ups and downs, of course, the natural downturn and upturn of the economy and the stock market, there's tons of opportunity. But what they've been seeing the last few months, the last 3 months, is there's been some groundbreaking highs. We've seen some really massive rebounds, which has helped a lot of clients, really mitigate the downside of things. And you know what? Moving into the first half of the year, there's a lot of different investors have different perspectives. They're saying there could be more volatility as the Bank of Canada kind of assesses the economy and how much the rate should increase. Last week we had a 25 basis point hike. It really didn't shake up the markets too bad as opposed to those 75, 50 basis point hike. But you know what? Through the end part, the better part of the second half of the year, they're really hopeful and optimistic on the fact that they're going to see some single digit returns, maybe double digit rebounds. Historically, after a large sell off in the marketplace, they do see that the rebound 6 to 12 months after.
Yeah.
is outstanding, right?
I think in the past, 50 years,
Yeah.
every big correction's followed by a bull market, right?
Yeah.
And I think if you look at it, what I was reading, and again, you get different opinions from different analysts, but the first half of the year was going to be a little bit up and down, choppy here and there. We're off to a great start. We're
Hmm.
seeing most portfolios are up, 4, 5, 6, 7%, depending on the level of risk.
Yes.
The second half of the year was where we thought that that's where the start of the next run was going to happen. And
Hmm.
then, so again, if we can get that, if we can get 4 or 5% from now until July 1st, first half of the year, and get a second half of the year that's solid, and then we would move into 2024, things can look pretty good for investors.
Yes.
And as
Yeah.
I always say, people have always heard it from me, is there's four seasons: there's spring, summer, winter, and fall, and the market's no different. What traditionally happens is you're going to have a winter, but following winter is spring, then you get summer, then you get fall. And what I find with all of our clients, when I show clients 10 years of performance, is I tell them that you're going to probably have two crappy years. So I don't know where they're going to fall. They could fall early, they could fall later. They're going to fall somewhere in between the next 10 years. You're going to have
Yeah.
two exceptional years to balance out those crappy years. And then you're going to have about 6 years kind of in the middle.
Hmm.
And the reason why, Nicholas, that most people never get the return they want is because they get antsy, they get nervous, they make poor decisions. Just stay the course. Put your head down,
Hmm.
understand your timeline, understand your risk tolerance, and let things just self-correct, and they
Yeah.
usually do.
Yeah. No, I agree. I'd like to also say, and as you mentioned, you know, staying invested is so important, and missing those days in the market where there's significant upswing can be so detrimental. And for
Yeah.
the clients that, really stuck it out, I don't have a lot of clients hopefully listening that kind of took my advice there strategically. I think you'll find, and everyone will find, that it's a really, really important thing, because you
Right.
do not want to miss those few days. It might seem very small, but you know what? Don't sweat the small stuff is very true
Well,
here. You want to be in there.
you have to believe that as night follows day and day follows night, that things go in rotation, right? And the market typically gets overbought. And again, I look back and I think, if on average in 2022 investors lost 10%, no one likes losing 10%,
Hmm.
obviously. It's only a loss if you sell, by the way. If you just kind of hang
Yeah.
on to it, you've made back 5% already this year. But, in 2020 and 21 during COVID, most investors were up, 10, 15, 20%. And I always say to clients, if you had lost 10% in 2020 in the heart of COVID, would you be upset? No, because you could understand why that happened. But in COVID, you made a 20% return during 2 calendar years. You've given back 10%. You look at what's happening right now in the housing market as well. Is nobody in their right mind saw the housing market going up 10, 15, 20, 30% during COVID.
Yeah.
And now it's falling back to a more of a median
Yeah.
return, right? So you made 30%, it's fallen back 10 or
Mhm.
15%. It's getting back into its trading range. So it's
Yeah.
important that people understand that. The third quick point here I want to get into is just, again, is some of the emotions, right? So the emotions the emotions in life is what is going to affect your performance.
Yes, of course. And I really am a large believer in something I like to say is your mindset here. The mindset around your wealth is no different than the mindset around, if you're playing high level sports, etc. I think it extends to every aspect of our life. And, when you're looking to invest, I think the number one thing you've got to really get solid on is your foundation, and that is the mindset, right? Getting clear on the objectives you have. Let's just say it's long-term investments in your RSP account. You don't need to touch it for 10 years plus 20, 30. If you can get really clear on the fact that I can weather the storm in many different environments, I don't need this as a short-term source of funds, etc. If understanding that will help you when you do see some of those headlines saying, "Oh, there was a large sell-off, the S&P took a hit," etc. Whereas if you kind of come into things with really an unclear mindset, not really sure, maybe I want to use this long term, maybe I kind of want to use it for a home the next 2, 3 years. As you start to invest and then you start to hear things around you, it's really easy to have a knee jerk reaction.
Right.
But if you're very clear on getting that foundation set, and that's of course your mindset, understanding that you've got the time, you want to be strategic, you want to be well diversified, you're going to play the long game. I think you're never going to go wrong, and more times than not, you're going to be able to separate those large emotional swings
Yep.
from your portfolio.
I will say that if I've seen it in my practice over 30 years, the client who puts the money in, he understands it goes up and it goes down, doesn't get too caught up in it. If anything, when it goes down like it did last year, it's not a
Hmm.
time to get out, it's a time to get back in.
Yeah.
Maybe add a bit of a position in there. So there's that person who just kind of rides the highs and the lows, puts money into it each month, each
Hmm.
year, just with habits, right? And that the other person is always in and out, speculating,
Yeah.
questioning, worrisome. Um, when they come back in 20 or 30 years, who do you think has more money, right?
Yeah.
It's the same contribution, it's the same age, it's the same portfolio. The
100%.
person who had discipline and had belief is going to always do well. And I think what I've learned over time is, when people, especially your age group, that 20 something age group,
Hmm.
when you develop a good plan, a good strategy, again, if you want the money in 2 or 3 years to fund a new car, that structure, that investment has to be different than if you're saying, hey, I don't want it for 10 or 15 years, right? So obviously
Yeah.
understanding your timeline, understanding your needs. That's why I think for those out there, you can do it yourself. Absolutely, right? You can go and try and do it yourself. But the big value, if you look at the reports that have talked about the value that advice brings,
Hmm.
the advice coaching, the um, being able to kind of bring them back down from
Yeah.
when they're ready to make a bad decision. The advice coaching is the big part of the plan. But
Yeah.
any last quick points, Nicholas, before we leave?
Yeah, I really like that comment you just made there, because one of the things I really enjoy and I take a lot of pride in is kind of walking the path with my clients as well. Because I am well invested in everything that I do show to my clients and recommend, etc. I personally am invested in because I believe in it. And when I see a little bit of emotional instability and kind of concerns and questions which I have in the last 12 months, I've enjoyed being there for the client and
Yep.
really voicing and understanding their concerns, taking it and processing it, looking back to the plan, but just showing them, here's the game plan that we set up, knowing that we've got 5-10 years out. We're going to look back one day on one year and we're going to say, wow, it didn't have as much as an impact as it seemed when you're zoomed in.
Right.
So for me, I take a lot of pride in helping the client, walking the path with them, kind of coaching them up and say, what's okay, especially in the times where their portfolio persists, that they've got the timeline. But I really do enjoy being there, helping them,
Well,
guiding them,
well, if you use a football
etc.
analogy, and it's football season right now and it's playoff time, is that, you're going to throw touchdown passes. You're going to look great. You're going to have big runs. You're going to have fumbles,
Yeah.
interceptions. Just stick with the program. Keep moving forward. Be positive. Follow the game plan. And what happens is over time is you plant the seed, you water the seed, you nurture the seed, and that little seedling becomes an oak tree one
Yeah.
day, right? So
Exactly.
great content. Nicholas, again, thanks for coming on to the show. Really
Thank you.
appreciate it.